Picture this. You're sitting at your kitchen table at midnight, staring at your credit card app. You just paid $380 to bring your balance down. And for about 4 seconds, you feel accomplished, responsible, like you're finally getting your life together. Then you scroll down and see it. Available credit increased by $380. And your brain does this weird thing. Part of you feels relief. Part of you feels permission. Like the system just told you, good job, here's more rope. You close the app. You don't spend it. Not today. But here's what nobody told you. That moment, that exact psychological transaction, just locked you into a cycle worth $14,000 over the next decade. And it's not because you're irresponsible. It's because you were rewarded for good behavior in a system that profits when you stay exactly where you are. My name is Bobby, and I spend way too much time thinking about why the money system feels rigged. And today, we're going to break down the single most elegant trap in consumer finance. How your credit score, the thing you've been trained to protect, keeps you perpetually in debt. If this feels uncomfortably familiar, you're exactly who this channel is for. We don't do financial gurus. We don't do motivation. We do math, psychology, and the hidden mechanics of systems that were designed before you ever had a chance to opt out. So if no one ever explained this to you before, hit subscribe. That's what we do here. Here's what most people believe. A good credit score means you're winning. It means you're trustworthy, financially healthy, on the right track. Here's what actually happens. A good credit score means you've proven you can service debt reliably, which makes you an ideal customer, not for wealth, but for more debt. Let me say that again. Your credit score doesn't measure financial health. It measures profitable behavior for lenders. And here's why the system pushes this belief so hard. Because the entire model depends on you thinking debt management is the same thing as financial progress. It's not. You don't build wealth by managing debt well. You build wealth by not needing it. But the system never rewards you for that. There's no score for I paid cash. There's no report that says this person has 6 months of expenses saved. There's no algorithm that celebrates 0 payments due. Instead, you get points for borrowing and paying back. Borrowing and paying back. Borrowing and paying back. And every time you do it successfully, the system says, great, let's do it again. Bigger. Let's walk through what this actually costs you. You have a $5,000 credit card balance at 22% APR. You're paying $150 a month. Feels manageable, right? Here's the math nobody shows you. Month 1, $150 payment. $90 goes to interest. $58 touches the actual debt. You just worked 2 hours to pay interest on money you already spent. But here's where it gets uncomfortable. Let's say you do this for 3 years, paying $150 a month, every month, like a responsible person. Total paid, $5,400. Amount of debt eliminated, $3,100. You still owe $1,900. You paid more than the original amount, and you're still in debt. But wait, we're not done yet. Because while you were doing that, your credit score went up. And the bank noticed. So they increased your limit to $8,000. And here's the invisible thing that happens. Your brain recalibrates. That $1,900 you still owe. It doesn't feel like debt anymore. It feels like room. So 6 months later, your car breaks down. $1,200 repair, and instead of feeling panic, you feel relief. Because you have available credit, you use it. Because you have to. Because life happened. Now you're at $3,100, still paying $150 a month, still getting gold stars for on-time payments, still sinking. Over 10 years, if you stay in this loop, and millions of people do, you will pay $18,000 to service a $5,000 starting balance that never actually disappears. That's not financial health. That's a subscription to stress. Let that sink in. Now here's the part that makes this whole thing so insidious. You're not stupid for falling into this. You're human, and the system is designed around how humans think under pressure. Let's talk about what's actually happening in your brain. First, there's decision fatigue. You're managing 47 things at once: work, kids, bills, health, rent. The idea of optimizing your financial strategy feels like learning Mandarin while running a marathon. So you default to what feels simple. Make the minimum payment, keep the lights on, survive the month. Second, there's scarcity mindset. When you're living paycheck to paycheck, your brain is in constant survival mode. It's not thinking about 10 years from now. It's thinking about Friday. And every financial decision gets shaped by, will I be okay this week? Not, will I be free eventually? Third, there's the psychology of rewards. Every time you pay on time, you get a little dopamine hit. Your score goes up. The app congratulates you. You feel like you're doing the right thing. But here's what the math says. You just paid $92 in interest to rent $58 worth of progress. That's not a reward. That's a 158% convenience tax disguised as responsibility. And fourth, this one's brutal. There's shame. Nobody talks about how much they owe. Nobody admits they're drowning. So you look around and think everyone else has it figured out. You think you're the only one failing. You're not. 77 million Americans have debt in collections. The average household carries over $6,000 in credit card debt. This isn't a personal failure. It's a design outcome. All right, let's talk about how you actually get out. Not with hustle, not with side gigs, not with just make more money. Those might help, but they're not the foundation. Here's what is. Step 1. Build a $1,000 buffer. Not savings. Not an emergency fund. A buffer. This is the money that absorbs life, so you stop using credit for shocks. Flat tire, doctor visit, your kid's field trip. This is the cash that keeps the cycle from restarting. Step 2. Audit your vampire costs. Subscriptions you forgot about. Fees you're numb to. The $12.99 here and $9.99 there that you barely notice, but that add up to $60, $90 a month. Kill them. Not because you're cheap, because they're bleeding you dry for zero value. Step 3. Stop rewarding the credit card for good behavior. Here's the move nobody talks about. Once you pay down a chunk, do not use the available credit. Treat it like it doesn't exist. The goal is not to manage debt efficiently. The goal is to starve it. Step 4. Shift from measuring income to measuring margin. Your salary doesn't matter if it's all spoken for. What matters is what's left over at the end of the month. Even if that's $50, that $50 is oxygen. Protect it. Step 5. Simplify your systems. One checking account, one savings account, one credit card you're killing. Complexity creates leaks. Simplicity creates clarity. Step 6. Reframe the goal. You're not trying to get rich. You're trying to get flexible. Flexible means an unexpected $400 expense doesn't ruin your month. Flexible means you can say no to overtime without panic. Flexible means you have time to think. That's wealth, not the number in your account. The time and space in your life. Here's the thing they don't want you to realize. Your credit score is not a measure of your worth. It's a measure of your usefulness to a system that makes $120 billion a year on interest payments. You were never supposed to win this game. You were supposed to play it forever. But now you know the math. You know the psychology. You know what's actually happening every time that app congratulates you for making a payment. And knowledge is the first crack in the system. You're not bad with money. You're trapped in a system with incentives designed to keep you exactly where you are. But traps only work if you don't see them. You see it now. If you're done playing a game that was designed for you to lose, subscribe. We're just getting started.